How did you build up the volume for the Board of Trade in Europe?
We'd upgraded our technology at CBOT, so we were getting all the new ISVs connected. That made a big difference. The old Liffe floor traders, the prop traders were a really growing group, and that's a group I was really well connected with in Australia because as a state bank, we were one of the largest clearers of locals down there. And so we had a really strong local or prop trading environment, and so I could speak their language, if you like, because we cleared those guys and they worked with us for many, many years, 12 and a half years on the floor. We also did a lot of education and training. We had some fantastic research and development and product managers in Chicago, and we got them all out of Chicago and got them to London. We went and did all the really big conferences and bespoke events for prop groups, for brokers, for desks, and got these fantastic and knowledgeable people over doing presentations and talking about products and talking about spread trading. And at the time, it was a really, the market's interest in treasury bonds, in the Dow Jones and all that kind of stuff, plus the commodities was peaking. So it was a lot of work, a lot of travel, a lot of education, a lot of engagement. We also set up bespoke market making schemes for the time zone, which hadn't ever been done before. So outside of the day hours of the US, they were super successful. And in the end, we end up having UK and European-based market makers and prop traders right there for day one for some of our new products we launched that weren't even in this time zone because they were so effective at market making and price making those products. Again, it was a really rewarding 5 years, and we built the business. It was sort of 20% growth year on year for 5 years, which then resulted in us merging with CME Group.
What did you do at ICAPS?
ICAPS was at the time the largest interdealer broker with both an electronic and OTC business model run by Michael Spencer, and the COO was Mark Yallop. They had long had an interest in the business model of CME Group and others and the revenue that would come from that. And obviously, being very present in the over-the-counter markets, they saw where pricing came from for the futures products where all the volume was being done, the revenue was being generated, been thinking about ways to enter that market. And so I went over there to look at setting up an RIE, Recognised Investment Exchange, under ICAPS. But first of all, we had to look across all the products. Where was there great data? What could we create products from? Bring those partnerships around technology, etc. It was coming together quite well. We had some really fantastic product ideas and a lot of interest. It took a lot to bring the OTC and electronic guys within that market together. But then the GFC happened and a lot changed for everybody after that.
How did the global financial crisis affect you?
The projects I was managing within ICAP weren't core to the business. Everybody obviously wound back the things that weren't core and focused on the core business and retention of capital so that they could survive. That first year was really challenging for everybody, and it felt like the world was going to end really from a financial services perspective. So my projects it was closed. The exchange projects were closed. We on good terms, but it was such a shame because I always wonder now if we'd been able to get those live, what the marketplace would look like. I looked around and I'd gone exchange to exchange since I got here, and I could see this big focus on emerging markets, and the BRICS was starting to be a real thing. And with the GFC, everybody was looking where else in the world is growth going to come from. And David Cameron was Prime Minister here. He was very focused on innovation and technology, but also on new partners. And Brazil had dropped from a top 3 trading partner with the UK to down in the 20s. And he made it part of their mission to bring that back up to a top 5 trading partner. And why that was important to me, was that I had been offered a job with BM&F Bevespa, as it was called back then, now B3, to bring them onshore into the UK because they were ready to start, if you like, offering their products and services to European and UK traders and customers. And it's a more complex setup over there. And so they needed to come onshore as a recognised overseas investment exchange and clearinghouse. So I did all that. I brought them all onshore with that. And that happened to coincide with a an intense focus on relationships with Brazil, because UK had the Olympics in 2012 and then Brazil got them for 2016. There was a lot of sharing going on, and so any Brazilian entity in the UK suddenly became very popular, and I found myself around tables and in rooms with people you wouldn't normally be around a table with just as a financial services, financial markets proponent. And it was really interesting and a lot of fun, and it was fantastic for me because I learned so much, and being so embedded in an emerging market that was such high growth. And of course being there meant that, and my relationship with the old CBOT CME team, and you'll remember Bob Ray, we were able to forge a strong relationship between BM&F Bevespa and CME. And I don't know if you recall, but that resulted in a 5% shareholding in each other and a seat on each other's boards, and finding ways to cooperate and collaborate together on products going forward. So it was very, very exciting.
Why did you go to NASDAQ NLX?
I started to realise there was a bit of a skill set there. I'd been building exchanges from scratch. Not many people had done that. The focus started to be on efficiencies around clearing and rates. And NASDAQ, obviously very much an equities market, but with OM and the Nordic markets in there, some futures as well. And the team at NASDAQ had decided they wanted to enter rates markets, and that Europe would be the best place to do that. So NLX was formed, and Charlotte Croswell was the CEO of NLX, and a lady called Amanda Mondrell, who was Liffe product leader and developer, and I sat down with her, and we kind of mapped out what good looks like, and brought in a lot of our old partners and collaborators and team members from the street to get it going. And we successfully got it live. It took 2 years on one of the NASDAQ platforms. We had the ISVs connected, really strong compliance and surveillance, market makers. It was quite a project, and I finished that and went and had my twins 20 days later, so just in time.
What brought you to Deutsche Bank?
So having kids is always tricky for women, balancing that juggle between career and family life. Once I knew I was having twins, not just one but two, I thought building out a portfolio career with a couple of board seats would give me more flexibility time-wise. So I let everybody know, and I was part of Wild. I'd founded Wild here in London, so I had really strong network. Also founded Futures for Kids here. We're one of the founding group of 8 of us, Futures for Kids. And I started telling everybody I think I'd like to do paid board roles once I was coming back, just to give me some flexibility. So took the time out from after NLX, had my kids, and said I'm out of markets for 6 months because it's a big learning curve, having your first kids. But about 6 weeks in, I got a call from a headhunter that Deutsche Bank was looking to add somebody to their UK bank board. And the UK bank was both PRA and FCA governed, because it had the old Morgan Grenfell banking licence there and a whole range of businesses in there, including retail cash equities, retail mortgages, asset and wealth management, the trust business, and all the CAS business. And I was very lucky. They chose me to come on board, and the team I got to work with there really set me up for my future as a non-executive director. It's the reason I've got the jobs I do now in Australia. It was the chair, Scott Dobby, was very generous with his time. My fellow Neds, as was Eileen Taylor, the CEO. Good diversity on that board too, but also across so many business lines, including the CAS with Futures. So Futures was represented there strongly. I learned about good governance, and also at a time post-GFC where everybody was grappling with a lot of things within their companies. Banks were being fined significant amounts across the globe for all sorts of things that had happened leading up to and post the GFC. So there was a lot of work being done from a regulatory perspective, a technology perspective. So it was fantastic. While that was happening, shortly afterwards, London Stock Exchange and a few of the big banks globally decided they'd have another crack at interest rate markets, at this time in collaboration with LCH, where all the swaps open interest sat. And that's when Curve Global came about. And Bill Templer was brought in as CEO, and he approached me to come across as COO, and we started another exchange from scratch.